Good morning, this is John Piper with the weekend video clip, and it's Saturday the 13th of February. I thought we'd start with the Chinese market this morning. The way it opens next week after the holidays may be very key to how the markets generally behave next week. So let's have a look at the weekly pattern. Quite simply, we saw a peak here, got a 1, 2, 3, 4, 5, fairly clear, very nice, well, very weak corrective action, 30% retracement, so fairly subnormal. And now what I believe is the next leg down starting. You notice in terms of time, we had from May through till September, so about 5 months, and now September through to December. So the decline, the rally was certainly slightly longer than maybe would be expected, but certainly you wouldn't expect it to go on much longer. So it seems unlikely that this decline is actually part of the correction. It could be until we see a new low. Previous low was at 2,530. So let's have a look at the action since this peak above 3.7. And we find two possible counts there. This actually applies to a few other markets as well. Looks like we've got a 1 here and a 2 there. Now this could be a 4 and a 5 here, in fact. So this could actually be a low of this entire decline with a possible third here. Third part would be down to there, fourth would be there, fifth bit there, and a 1, 2 here somewhere. So basically what I'm saying is that this low here could actually be of 5 waves down, and we could see an ABC rally, maybe up to 3,000 again, coming in over the next few weeks. I.e. that, and I think it's quite likely over the holiday period the Chinese authorities have tried to calm things down a bit, try and make things a bit, well, set the scene for a rally basically. I don't think it'll last. The chart pattern's pretty clear. Looks to me like we're going to break down substantially. It's just a question of whether we do it now or later. I think it's certainly a case that we're going to do it later, but the rally will probably be subnormal in some way. So I'm not expecting a too long a break. I mean, clearly it depends. I mean, we can trade on what we see rather than what we think, and what we see we'll know about come Monday morning. Okay, on to FTSE. I'm currently in Tangiers. I travel quite a lot, as you know. One of the issues with being in less developed countries is there's always some guy with a hammer or a jigsaw who's trying to develop the place. But so I've had to close the window, and hopefully the hammering isn't too much of a nuisance. Anyway, this is the daily chart of FTSE. We have the A, B, C, ABC B wave, and now the C wave developing, which I believe has got further to go. And the chart pattern is A, B, C. That's an A wave, ABC B wave with the meat, as it were, starting from 6.3. So let's have a look at the action since 6.3. Right, well, the C wave, the 6.3 is around here, in fact. The C wave started there, so we have what could be a 1, 2, 3, 4, 5 there, then a 2 wave, then a pretty clear 5 here, 1, 2, 3, 4, 5. So I count that as 1, 2, 1, 2. And once this rally is over, I'm expecting quite a sharp decline to be the third wave coming in. We've already seen quite a sharp rally, in fact. Let's go down a leg again. Right, so here are the 5 waves down. So you've got quite a clear pattern. 1, 2, 3, 4, 5. A, B, C. Third wave, 1, 2, 3, 4, 5. A, B, C again. And the fifth wave, 1, 2, 3. No real. Well, the fourth wave a bit subnormal there, so maybe we missed out on the 4, 5. But that seems a clear low around 5,500, which is a pretty round number for those who like such things. Followed by currently an ABC. I said in Thursday's report, which was around here, in fact, that seemed to me that it was getting a bit too easy making money on the downside, and that was that's often a warning sign that things are about to change, as indeed they have. So what happens next here? 50% retracement is around 58.10 thereabouts. So 5,800 is a key level at that point. If we see acceptance above 5.8, I would begin to wonder whether we're going to see a much stronger move, maybe even a retester up here. It depends on where you count the 5 waves from and that kind of stuff. Let's in fact look at the DAX now. I think it has a slightly clearer pitch. Right, clear pattern here. A, B, C, same pattern really. A wave, irregular B, the lower lows, and now the C wave, which in fact counts as can be counted as a complete 5 waves down, in fact, which suggests that it could in fact be a complete ABC move, i.e. the whole thing is just an ABC, but also that we'd like to see a stronger rally, which might even bring us back to 10,000. So that's something that on the DAX looks very possible. Especially the only perhaps drawback is this is clearly an ABC. And let's go down to this pattern in a bit more detail. Okay, it started from here. So if we look at the, actually you can count to the 5, I guess. 1, 2, 1, 2, 3, 4, then 5 and a 4 and a 5. Bit contrived, but 2 wave ABC, 3 wave down to there, 4 wave, then pretty clear 5 here. 1, 2, 3, 4, 5. So that's a complete 5, and so far we've seen a very feeble rally, very little ready to go on. But a move to 10,000 would sort of be very much on the cards. In terms of time, this move started from just before December, so we've had a couple of months almost, a bit less, say 6-7 weeks. So it could easily see 3 or 4 weeks of upside there, which would perhaps time with the Chinese market. I think that's probably my favourite count. I think probably it's time for some upside action. I think the bears are going to get a good shaking, so maybe it's time to start selling puts rather than calls in the option strategy I'm working on at the moment. Don't do this unless you know what you're doing. Options can be a graveyard for the trader who doesn't really know how they can work. But if you do know how they work, then they can be extremely profitable, as I'm sure, as of course can also all types of trading. So right now, I think until we see something to deny that, I think a test back up to 10,000 is certainly a possibility. It may well be a subnormal move, given that we're in a bear market, so it may only last a couple of weeks, but we could still see the market back above 9,000, maybe 9.5, and if it gets a fair wind, then it could go, I think, higher than that. Alright, finally look at gold. This is a daily chart. So we had this ending diagonal type thing. 1, 2, 3, ABC 4, 5, and that has given way to this explosive move we've been seeing recently. And I hope you got on board this. I mean, I've been plugging away at gold for a while now. I appreciate that it has been a while, but so we have now seen this very clear breakout. Although it won't go in a straight line, as nothing ever does, I think it's going to continue until it's only take out 1300, and beyond there, who knows where it might end up. So looking a bit more, I guess what's encouraging here is that this bit here looks like a third wave explosion, or this could be some kind of buying panic, I suppose. That's the right word. 1, 2, 3, 4, 5, ABC. If that is a third wave, then these are all 1, 2, 1, 2 type things. So that would say 1, 2, then the third wave, or third of a third, I should say. We've still got a fifth wave to come there, and I think we could easily see this market continue to move up. Having said that, if the equity market is going to go through a couple of weeks where they're going to see a correction, then gold may not do quite that well. Having said that, again, the miners and gold have been going up regardless of what the equity market have been doing recently, the last the whole of February, I suppose, and in fact part of January. So certainly the chart pattern looks positive and encouraging for more upside with little dips, and I'd be very encouraged if we do see decent rallies in, say, the DAX, and gold continues to rally regardless. It would mean that what could be viewed as bad news for gold, either renewed resurgence, some confidence in equities, is being ignored by the gold market, which maybe the people see the real issues of the economy, which I continue to look at as being fairly dire. In fact, all we'll be seeing if we did see sharp rallies, it would be more of a bear squeeze than anything else. It wouldn't necessarily mean that any confidence is being renewed at all. It would just mean that the bears have got a bit overzealous and need to be squeezed down a bit. Right, so I hope you found that interesting and useful. I'll be back with the report for subscribers on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.